Hi there, this is Sean Brodrick for Uncommon Wisdom Daily. Signs of a worsening economy are all around us, with unemployment that is stubbornly high, consumer confidence that is plummeting, and Washington in gridlock. So, when crude oil rallies in the face of that bad news, we really should take notice. In fact, I think crude oil could be heading up to test overhead resistance around $95 a barrel. That's bullish not only for crude, but for energy stocks. There are a couple things that are driving crude prices higher. First, there is increased optimism that the Federal Reserve will proceed with another round of quantitative easing. Chicago Fed President Charles Evans told CNBC that he was in favor of more easing. Evans believes that the U.S. Federal Reserve has room for accommodation and that we still need to do more monetary policy. Second, consumer confidence may be down, but consumers seem to be spending more money. Consumer spending rose 0.8% in July despite weak income growth. Consumers saving less and spending more is seen as bullish for oil consumption. And third, the US dollar is weak, and it's getting weaker partly as a result of expectations for another round of quantitative easing. Now, there are different ways to play an oil rally. You could buy crude oil futures or a fund that tracks oil, but I think you might want to consider an ETF that holds energy stocks like the XLE, because those energy companies are leveraged to crude oil. Let's take a look at a chart of crude oil now. Looking at the chart, you can see a pretty bullish setup for the XLE. I think it could rise to overhead resistance around 72. At this point, it's hard to tell whether the XLE will rally further from there or run out of gas. I think that the pieces are in place for a short-term rally. The long-term problems are still in place, so don't get comfortable with this position. Have your exit picked out before you buy. This is Sean Brodrick for Uncommon Wisdom Daily. Thanks for watching.